Hey guys, Mike here. So, oh boy, I can almost see all-time highs on the S&P and the Qs. Can you see it? I mean, boy, what a move up today. A lot of high beta stocks moving as well. And there's a few things that happened today. One, Jerome Powell was testifying, and he said something which definitely caught my eye. So I'll show it to you because I want to get your input because I really don't have a clue what he's talking about. Even when I think about it, unless something's going to happen, I don't get it. But it was kind of a truth bomb, and I was like, okay, cool. So we'll discuss that one. It's very important to get that. The other thing is, with Jim Carson, you've heard him talk about this Summer of George, right? We had this last year and it actually played out this way. And I think it's important, like we're in that now. And so I think it's important to understand what that means, okay, and what it entails and stuff. And so I'll let you listen to him. We'll talk about it really quickly. And it definitely makes sense. It makes sense to me, at least. And so I think it's another thing to understand. But also we'll go into the indexes. We'll go into some stock charts and stuff and see what we're looking for, as well as more earnings. We do actually have some important earnings coming out as well this week, and some important data. And don't forget, Jerome Powell will also be testifying again tomorrow. But here's what he said, and then we're going to discuss it real quick. Very short clip. And I'm sorry, he's asked specifically why they are not cutting rates. Why are they holding at this point in time?
You're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that that would call for us to be at a neutral level, which would be, a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot more. It's 6 months since I said that.
And so the key word is meaningful inflation. And he's talking about all forecasters. Now, my question would be well, for that to happen, you need to have, one, an increase in oil prices, because we saw, now does it have to happen this way? No, but what would really cause a meaningful increase would be an increase in oil prices. We saw the shock it gave the whole system. We all learned, like, wow, oil is all these different components and affects all this different stuff. Yes, it does, okay? But oil's in the crapper, okay? But the other thing is, what does everybody worry about the fourth quarter for? I don't care if you're talking about Dan Niles, Jim Carson, any of the rest of them. So many people are saying they're worried about the end of the third, fourth quarter because of all the demand that was pulled forward in the first half of the year with everybody trying to beat these tariffs. Okay, with Apple flying in, tons of iPhones, everybody's moving stuff in, and even you guys, all the reports show it. Y'all are running out there trying to beat these tariffs on big ticket items and get that stuff. And then when you look, you're kind of like, what tariffs? I mean, they're raising money, but we had the board, and then all of a sudden that went away, and we have one deal in place, I think it is so far. But they've already said as long as these countries are negotiating good faith, they're just going to keep, basically pushing the ball down the road, right? They're going to keep this pause going. It's not just a 90-day pause. They're just going to keep extending it out if they're negotiating. You know what I'm saying? So, and again, tariffs are supposed to be, once it's set, it's like basically it's a one-time, boom, move up in price, and that's it. But remember, inflation is the increase of prices. And so he's saying is every expert is expecting meaningful increase in inflation. And I'm like, wow, okay. I can't see, especially if we think demand is going to be weaker in the second half of the year, something's not giving here. So either demand is going to be better, oil prices are going to be back up. And I guess we're expecting much larger tariffs on a lot of other countries than we were expecting, all this stuff. And remember, just because of the tariff on a country like China, again, if we come to say it's 10% across the board for all the rest of them, they're going to continue to be able to shift their stuff to other countries like they've been doing to avoid the tariffs. You know what I'm saying? So I'm just curious. I mean, I definitely want to get your thoughts in the comments, what I'm missing on that, because again, I'm not saying he has to cut. I would actually, personally, I would wait. I know it's very unpopular to say this, but I would wait until probably the September meeting to cut. Maybe, I don't think they have one. I think it's July, and I think it jumps September, and that kind of stuff, just to see. But, because I don't know what daddy's looking at, but I mean, it's not like the economy, the employment, for example, is holding up. But I was just looking at like the manufacturing data, the services, all this stuff. I mean, it looks not great, to be honest with you, but it hadn't looked great for quite a while. It just hasn't. And if we did draw a lot of demand forward, those numbers should continue to look bad going into the second half of the year, so definitely want to get your input on that. Now, the next one is, before we get in the charts, is like, what is the summer of George? I think this is important to understand. They called it last year and it worked. We're kind of in the middle of it now because it kind of starts in May and we just finished OPEX. This interview was done like right before OPEX. Remember, we talked about if you didn't see weakness going into June OPEX, that it could be supportive, all right, going into July and stuff, okay? And so listen to this real quick and see if it makes sense to you.
We're within the Summer of George right now. Can you just explain what the Summer of George is for people?
Yeah, there's a lot of nuance here. So yeah. buckle up. And I'm glad you're asking me to clarify because there's a lot of confusion around it. So summers, partially due to holidays like we're in right now, is the second most holiday period on the calendar other than November, which is Thanksgiving and Christmas, and then New Year's, and then President's Day. President's Day. The holidays here are Memorial Day, Juneteenth now, 4th of July. You have this very concentrated period, and it's the summer. Mm-hmm. So it's not just the days that are off, it is the days around those days, right? And people go to the Hamptons, people go to the beach, they go in Europe, it's a 3-month holiday, right? And that decreases volume, and that creates a situation where the structural flows, which don't diminish with this, are bigger relative to the liquidity and become more important. Mm-hmm. It's also a period where vol compression, if it starts to take hold, can overwhelm everything else. We have seen a period of vol compression into this rally that we've seen. So if you get a rally into the summer and vol's compressing, it's really hard to break that vol compression, basically. And when you have vol compression, we'll talk more about VANA and CHARM and how it relates to this, but when you have vol compression, particularly in periods where there's big skew positioning, which there's record positioning now, and we'll unpack that at some point, that creates very positive equity index flows. And they're not every day, but they are particularly strong as we enter big expirations with big open interest, like the June OPEX, which is this Friday. And so you have this loop where vol is compressed. Because of vol compression, as long as the market doesn't move, you have a buyback of stock that happens, which compresses downside even more and the risk of a tail even more. And then what happens is every day that goes forward, the market makers and dealers in the street also decay longer vol. And they're already long vol. So they're long vol, getting longer vol, there's supportive flows coming out of it, and you just get into this loop. And remember, vol by definition has a risk premium and is a loser more times than it is a winner. Mm-hmm. So if you have structural effects like this, vol becomes a hot potato. No market maker, no dealer wants to hold any of the vol. And so it just goes lower and lower and lower and lower. And so this generally happens throughout the summer. And eventually, and this is not always, right? There's not every summer is going to be a summer of George. But once you enter into these periods where there's nothing going on and, just want to go to the beach and read a book from beginning to end in that order, as George says, you essentially, it's reflexive and it doesn't tend to come to an end until about August. And sometime between August and September, by Labor Day, it will turn. Usually at around August, OPEX is kind of the most likely. But again, the flows and timing of that can be a little different. Last year, it came early.
And if we look back, you can see this was last year, right? May, June, and then July, we got in the middle of July and just absolutely cratered, okay? But again, I believe that was OPEX right there, a little dip. This was OPEX right here. And of course, that looks exactly what just happened, right? Like June kind of sold off a little bit, and then we got to this week. And boom, away we go, right? And then, of course, you got this big 15% move down right there. And so looking from July, and again, this is where it gets choppy, September, August. But when you look what happened to the VIX, and we'll look at what's happening now, the VIX was just in the toilet. I mean, the VIX was down to 12s And so when you're talking about vol suppression, it just means like prices aren't moving as much as you would think they would move, especially as far as the indexes are concerned. But again, and what's weird about that now, and of course you have this big move up right there going in August when we had the big sell-off. But when you scroll over, to what's happening now with all the different stuff you're seeing with tariffs and Iran and all this other stuff, I mean, just look at this. We couldn't even get above 22, right? Even what was going on there, I mean, what was that in May right there? You got 24. Look right now, 17. 17. Like it's actually going down. This is what he keeps talking about. And so if it continues to stay suppressed, the market can continue to just melt up. Like what happens? Every dip gets bought. And that's what you see happening, right? With every war headline, World War III, or whatever it is, tariff headline. Doesn't even matter what it is now. And you can see this Grim Reaper meme, which we ain't seen in a while, but you can see like every single story is supposed to drive the market down. Sell America, sell and man go away. That does not exist anymore, by the way. Moody's downgrade, June is gloom, Trump versus Elon, here's Iran war, and now of course it's the S&P, which is the Grim Reaper, is coming for that one too. And so that's what you see happening, right? And when you look across the board, these are some of the stocks that hit 52-week highs, right? But look at all the different sectors represented. Microsoft, tech, JP Morgan, banking, Royal Caribbean, that's obviously travel, Rocket Labs, you know what they do, that's space, right? Spotify, you know what they do, they're space mobile, another space, Cameco, and then GEV, which of course are utilities. I mean, you got all these different sectors, except of course like oil and stuff, I believe. Some of these stocks hitting all-time highs, when you look up here, there's the SPX. I mean, is it going to hit all-time highs tomorrow? Let me know in the comments. What do you think? Who knows? Maybe we'll just do it overnight, But again, we jumped above that daily fair value gap. So I kept saying, if you can't get above the daily fair value gap, really don't mean anything. Well, of course, then we talked about it probably going to gap above it, and that's what it did. And now it's 0.87% away from all-time highs on the SPX. The Qs are even closer. I mean, they're literally right there, almost touching. I thought they were going to hit today, to be totally honest with you. I thought they'd drive in the last 5 minutes, but they did not. And of course, we got that gap below. We'll remove these trend lines. They don't mean anything anymore. And again, doesn't mean we have to hit all-time highs tomorrow, whatever, but it's just right there. And I saw a lot of puts on, I think it was the Qs being sold about the last hour and stuff, and so they're trying to collect this premium. But you look at the equal weight ETFs. I mean, this clearly shows when you see the difference between RSP, which is the equal weighted S&P, it's 4.3% away right here. But you look at QQEW, and it's obviously much closer because it obviously has more stocks in the tech sector. You see it's only 0.84%, okay? And so it's right there. And then, of course, you pull up the Dow and you see the same thing where it's quite a ways away, okay? So we know because there's a lot of sectors on the Dow and the S&P, like healthcare, energy, that kind of stuff, as far as oil, it just isn't looking that great right now, okay? And so, going into the stocks could help it. We talked about Tesla. I'd love to get a pullback in this area for a bounce. Almost got to the 0.5 fib today. I don't know if he hit it or not, but it would be pretty nice. But that was expected after a 10% move, no doubt about it. And so we are moving down there, even in after hours. I think extended hours is coming down. I think I actually hit the 0.5 fib to get it. So we're going to see if this area holds right here. And I'll tell you why. You can see this sell down more in just a minute when we look at some other stocks right here. But of course, you have the 0.5 fib, 0.78, 332, somewhere between 332, 336, just somewhere in there. I'm not going to be surprised to see a bounce, okay? And this is something I said yesterday, and I'd love to see it, right? It's starting to start gearing up, assuming nothing happens with the robo-taxi stuff. See if it can get through this 4-hour fair value gap. It's leaving behind right there. Start pushing up. And all you got to do, once again, it's not going to be a good day for Tesla if those calls don't come in, okay? See how it was? Hey, no calls, okay? It was some puts, nothing much. Well, it was basically came down a little bit, didn't do anything at all, really, okay? And so unlike what stock? AMD. Like AMD, if we flip over to that one, the calls were just rolling in by the millions in the first 45 minutes. And so that's why AMD had a huge day. All right, and then once those calls started, leveling off, and of course AMD started leveling off as well. And that's what we had talked about in the Discord right there. And that's all you go for with Tesla. You know what kind of day it's going to be if that happens. Again, here's AMD. Was riding the trend line up, got beneath it. Now it's back above it. And what was it going for? The gap fill. So I was telling members it's going for the gap fill. So that gap is toast. All right, it is closed above this trend line now. Again, a gap up, huge fair value gap there. And we pull out, I've showed you what the levels are, and we'll start really putting some lines of this instead of just putting the volume range, volume profile on this. But clearly you can see why it stopped right there, 138.33. We talked about that will be the next hit. It got its hit. If it breaks above this, then you can see some other areas we're going to start marking out for different levels right here. If it gets above it, it'll start moving up through that next small little volume gap right there. And that right there will be 146.27. So we'll go ahead and mark that one out as well. We'll go ahead and mark out the 170 area right here, actually 165, excuse me. And then beneath that right there, we're going to mark out 155.16. And so that's just some areas that it can hit if it continues to move higher. And if it does move back down, anywhere from 130, 134 on AMD will make for good support. And of course, here's Hood right there. Once again, there's all-time highs, few bucks, and it's going to be there. Okay, this one's been a great mover. It's been stair-stepping its way up and stuff, and it's held that trend line, right? It's rode that trend line right there, as you can see, like all the way up. So beautiful right there. What is it going to hit tomorrow? We'll see. But again, we were just waiting for this to break over around that 77.55 mark. You know, once it broke, we knew it'd probably hit all-time highs. So I'm not going to be surprised if we go ahead and grind up to that tomorrow. For sure, if not, just look for it to hold this trend line right here. It's held multiple times and bounced. So, and again, it's just step this way up. So it deserves to be where it's at. It's not some crazy, high-flying move or anything. Definitely a beautiful structural move, as I like to say it is. You look over here at Uber. Again, this one's almost at all-time highs as well. It got some good news coming out of Atlanta. Because remember, I had partnered with Waymo. Waymo's starting to roll out in Atlanta. And wait to see how that goes. I think they even applied for New York, which I'd be surprised if New York City would approve that. But we'll see. But again, this right here, can it get a pullback? Sure, but it tested this level right here multiple times around that 0.79 fib right there, and it held twice, okay? And so it's just a few bucks away from trying to set all-time highs right here. Nice little W pattern playing out right there. So, could it come down, test what was, a previous all-time high back in the day in that level right there, right around 87, 87.45? Sure, no doubt. Come back and fill the gap? Sure, no doubt about that either. Right, it has some big moves up, but again, I'm not going to be surprised if it just pushes right on through tomorrow. It's not going to surprise me a bit. Now, when you look at semiconductors, and this is the one that could hold Tesla back, if NVIDIA gets going, the rest of them get going, can they move together simultaneously, Tesla and NVIDIA? Maybe finally, we'll see. But this thing, semiconductors are getting going so much. You even had Intel, which I don't talk about because it's nothing but just a waste of our tax dollars, this company is. But there it is, hitting that trend line once again. I think it's the 6th hit. So if it does break above it, the levels right there are pretty plain, right? 2480 is going to be one to look at right there. And you can see if it gets rejected, you could just keep wedging. But if we do break above 2480, I think it's going to be a good one. And then right on 2650 for Intel. Again, a lot of people are in this one. I've never really figured out why. I hope to God maybe it has a big breakout for you guys to start, getting a return on our investments. Avgo, we talked about this one, just wedging. Nice explosive move today. Touched all-time highs, got rejected right there. So we'll see if it wants to finish the job tomorrow or come down and fill that gap before continuing up. You can see that boxed area also will be very, very good support for it if it does come down. So 255.51 if it comes down. If not, say hello to all-time highs on this one. NVIDIA is also trying to grind up and do the exact same thing. Actually got shop here we talked about. I think we talked about it last week. Could we get the pullback down to like the 104 area? That's what happened. Nice bounce up today on this one. Really just watch that trend line. If we can break 116.20 right in there, then we're going to 125.09 for this one, which is what that liquidity area right there is. See that big old fair value gap that'll align with that. And so definitely watch this one. If it does happen to come back down, watch for the gap fill. Also watch for 104.09 to hold once again. It's another one of those high flyers and somewhat of a lagger when you compare it to what's going on with other stocks. And last we have Google right here, which once again holds the trend line yesterday. Gets the bounce. This is a major lagger. The question is, can we get up to like 170.68 on this one? 172, 173.11. We'll mark this box right here out if we can mitigate this. Again, this one's kind of like an apple. This one's so shameful that when you pull up the moving average on this thing, like it still has not gotten over the 200 moving average and been able to hold yet. That's just kind of crazy. It's holding the 50 right now, but there's the 200 moving average. It's like, wow. You're talking about being way behind. I don't know if Apple and Google will play catch up anytime soon, but you would think like this is the time. If the market continues to go to all-time highs and we break it and we continue just to melt up, you would think at some point in time those two would actually do it. They own Waymo, and Waymo's getting great headlines, but again, Google is kind of like, you know, and again, it could just wedge right here, right? It could just come up here, bounce, wedge, and then finally have maybe a bigger breakout. It does like to do that, okay? Now, earnings for tomorrow, General Mills, paychecks in the morning, and then there's Micron, which everybody will be watching for semiconductors in the afternoon. And then as far as data, all we have is new home sales and crude oil inventories, and home builders have been having a really good in the last couple of weeks in the market. Home builders have led in the last 2 days, as a matter of fact, out of all the sectors. So that's interesting. Let me know what you think about what Jerome Powell said and some other stocks we talked about in here. Please hit that like, subscribe button on your way out. I think that's sign up for the membership. Less than McDonald's combo at $7.99 a month. That's everything you get with it. And I will see you guys tomorrow for another fun one.